Hello, my friend, Mr. Frontman. Can you let me know if this is choppy, my friend, or is it okay? Hello, my friend, Mr. Frontman. Can you let me know if... Excellent. Okay, team. So look, here's the thing. We've seen a huge sell-off, which I think was probably about right. We'd mapped out actually a whole lot earlier that we felt like this was the start of a Elliott 5 wave. Now there's just a few interesting things just to be mindful. I've got what I think are my zones of interest. And so what I just wanted to I think it's always important that you need to just take a view on the macro landscape always, because if you don't do that, you can quite easily get caught out. And so I just want to go over a few little things just before we get started. So just picking up on, the standard kind of Elliott wave theory. So look, I think you'd probably agree this was the point at which we started to reverse back. You would say this was wave 1, and you could probably count 5 waves within this first wave. And then we've had a nice correction. And then you would probably agree that this would be an impulsive third wave. And now the question is this the end of the third wave, or do we still have further pressure to go? Well, we'll have a little look at that in just a second. So we've mapped out the 5 waves. And now the first thing you always want to do is look at retracements, right? So if this is our first level down to our bottom level, well, we hit the 0.5 pretty much spot on. Now usually you want to see that go a little bit higher, up into the golden pocket range, maybe even a tad higher again, depending on how the algos like to work. So that would, for me at least, it's still a retracement. And then now it's like, well, how do we know how far 3 would go? Well, the kind of narrative, the standard you expect is that 1.618, right? So if we take our trend fib extension, and we go from the top down to your first wave and then back up to your second wave, well, you can see this whole third move here came right down to the golden pocket, which is that 1.618. Actually went a bit further. It went down to close to the 786 actually. So we would be sensible to think that actually this could be the end of that third wave. However, we've got news in like 8 minutes, 7 minutes, which can sometimes flick a switch on, and things could just change again if the news is super bearish. So, right now from a structural perspective, we still may start to move up a little bit, just because from a structure you can see we have kind of hit that 1.618, which is where you like to see your third wave get to. Sometimes, however, that third wave can continue and go down to the 2.618, which is, all the way down here. But we are just taking a bit of a relaxation point here. So we'll keep that monitored just for now. Obviously, we've got, as you can see in the bottom left-hand corner, we've got some meaty fundamentals coming up. We've got the average hourly earnings. So what, the Fed will be looking for is, are we starting to see a decrease in people's wages going up? Because that's going to tighten the screw a little bit, isn't it? That's going to mean it's a bit more difficult for people to accept these price increases, let's just say. And then we've got the US non-farm payroll employment change rather. So how many people are, not in their jobs, and then obviously the unemployment rate. So how much more unemployment is there from previous months? So not anticipating any change in it, which is interesting from the forecast to the previous. So they're expecting it to stay static. So if we come in red here in the actual column, then you could probably suggest that we are going to have a little bit of a move back to the downside. So we just got to wait and see how we come on. And now, other thing we want to make sure we're mapping out, and you guys know, it's all about liquidity. Liquidity is key. So we're going to come down to the 15-minute. And I've put the zones where I would be interested one way or the other. I'm just going to put on my volume zones. I talk about these a lot. The volume zones are essentially the most traded volume across the entire Bitcoin price history. So the red zone here is the point of control, which is essentially the most traded volume has occurred in this area. And then these zones are where the a lot of high peaks in terms of volume. And so from a marketing perspective and a psychological perspective, where we've spent a lot of time in the past, we tend to spend a lot of time in the future as well. So just keeping our eyes peeled on that. From a liquidity perspective, obviously we've had that crazy move to the downside in fits and bursts. Now this one here, that's so impulsive, that move right there. So when you think about how markets work and liquidity providers, so let's say your ByBit or your Binance or your Mexi or whatever kind of exchange you are, you have to have them exchanges providing liquidity. So if everyone's constantly selling because we've, you know, bad news has come out or whatever else, and therefore everyone's selling, then those market makers have to keep on providing liquidity. Otherwise, there are no markets to trade in, and the moment that liquidity runs dry for where people can't get filled, then they're going to use other exchanges. And so it's important that market makers have to provide liquidity at different levels. Doesn't really matter which way the market's going, but on the consequence of that, you also have to advocate that those same market makers need to make money. So if they're just providing liquidity for you to be short, and that's not, you know, that's not a way to make money for market makers. So they will obviously try to bring price back up at some point, and the way in which they do that is by just trapping liquidity. They play on the fact that we as traders are greedy and we don't take profit, and any resting liquidity, anything that's resting in the market that hasn't been absorbed or taken as profits, will essentially be liquidations, will be stop losses and stuff like that. So, you know, we're just going to mark out our liquidity zones. So right now, you can see, and the way you map your liquidity zones is you are focusing on the major points in the chart where we get a rejection. You can see we had a nice rejection here. Price tried to come back up. Price got rejected. What does that mean? So sellers have come back into the market at this point, right at that wick. They've probably got nice tight stop losses all along here. If they've 100x'd or even higher, then they're going to have lots of liquidation areas around here. So, you know, you can see if price comes back up here, what the market makers would like to do is to flush out some of them liquidations, to stop out some of these people's, because if they stop them out, what does that mean? And that means that money is then staying and retained in that exchange. It's not moving back out of that exchange. So that's why we've always got to think about where liquidity lies on a chart, because that's usually where price is going to head to. So where are we now? We are 3 minutes away. Let me just give this a little bit of a refresh. See if we've got our nice little green. Yeah, we've got them there, baby. Okay, so let's see what happens. 3 minutes to go. 2 minutes to go. Now, what I'm going to do, so what might happen, and usually what happens is, wherever the mean goes, the average. So if a lot of people are bullish about this news, then price is going to go up. Of course, price is going to go up. But then what market makers will try to do initially is to get commitments for the buys, quickly try to push the price down to get as many of them liquidations as possible before actually going long. And when they're doing that, they're actually building those long positions on the way back down. So it's a double-edged sword. They're trying to liquidate money to keep it in the exchange, but they're equally trying to push price to the upside, build their own longs, because they know the price is going to go up, therefore they get money on the upside. So let's just see what happens. So just so you're aware, I've got long orders in this area. I'm not overcommitting at all, but I'd like to see, you know, price come down here. Now, if we are on wave 4, yeah, so if this is now the bottom of that wave 3, let's just say, and we are heading back up, then I'm going to be having a little look at this liquidity area here for the short stop. But my actual area that I think we'd probably come back up to is this red zone here, and that's that Fibonacci retracement area of that 618 to 786, kind of that pocket zone there. So we're covered on both sides. Okay, so look, get ready. We're going to start seeing some action very, very soon. So we shall see. I'm just making sure I've got everything ready to rock and roll. Let's go. Okay, so I'm gonna have my limit buy at that. There we go. Let's see. Price is moving. Price is coming up. It's heading back into the zone. Right into the volume zone. I'll be looking to short at this liquidity area here. So unemployment rate has actually gone up. That's good for the Fed, obviously. Okay, big move to the upside. Just be careful here, guys. Prices continue to push. Still haven't got the data through for the non-farm employment yet, but the big one for me was the unemployment rate actually going up, which means there's more people becoming unemployed. So that's good for crypto, yeah. Because it kind of gives the impression for the Fed that it's actually working. You can see we've just hit the top of that volume zone. These volume zones are really, really powerful. They're very, very much psychological points on the chart. And yeah, I've covered this many, many times in the past. So let's see. Still not got anything yet from the average earnings, non-farm, unemployment change. Sorry, employment change rather. No data yet. Just a little bit of whipsaw action at the moment. Don't be getting caught out in these trades just yet. Still not got my data through yet. Hold the fort, team. Hold the fort. You see, if we do continue to the downside, then phase 3 is not over. Still haven't got the data through yet for the hourly earnings, because that's a big one as well. Because that's like, okay, we're putting prices up, but employers are counteracting that by raising wages, and so they don't feel the effect. And that's so what the government, what the Fed would like to see is that the actual wages and the hourly earnings is actually decreasing, as in the becoming less. .6, still not got the data through yet. I don't know if it's my connection. 3 oh yeah, it just come through. Wow, okay. So they forecasted it would go to 224k, but actually it was 311k. So that's not good. Not good for the Fed. That is good for the Fed and bad for crypto. So risk assets. And then 0.2. So actually, the earnings have gone down. So again, that's a good metric for the Fed. So let's see. No major shocks. If I'm honest, there's not a huge amount of shocks there. Whoop-de-woo, as we'd expect. So let's see how and always remember, we have two versions of this. We have the version that's here and now, and then we have the version of how it's reacted to at the actual open. So we'll see how the day goes. Just remember, right now we've got liquidity here in this zone, so we need to see how we react to that data. I'll be shorting at this liquidity level here. It will be a less favorable short than I would do if we come and raise up to here. That would be a different ball game again. I'd probably ape in quite hard there, but I would be certainly having a look if we want to entertain this area here. Let's see what Let's see what this has provided. Let's see where the trapment is. So you can see, yeah, it's a very much an indecision kind of idea here, because the volume in this candle here, we're on a 15 minutes. You can see the volume is all in the middle of the candle, which tells you that, and the point of control is absolutely spot on right in that center as well, which tells you actually that the volume is being traded is both bulls and bears are indecisive about that information. And this is what normally happens when it's interpretation, isn't it? So we've got a lot of trap sellers at the bottom here. Sorry, a lot of people who are trapped here, trying to short the market. So let's see what goes. You can see this here. This tells you that there's more buyers than sellers, but the CVD, so this is the market orders, is negative. So that means that even though buying pressure's coming in, the bears are saying, no chance, we don't want to go up. So, let's see. The other thing as well is this is now our new liquidity line here, yeah. So that's where we'd have liquidity resting also. Bit of a tug of war going on at the moment. This is not the area to trade, guys, by the way. Don't be trading this range here. We're not in an area of value right now. Unless we retrace up to here, or we retrace down here, I'll be entertaining a long. This is that whole zone, yeah, that point of control. But you can see the price has tried to push up, but we're just rejecting it. CVD. Let's have a look at the CVD. Where are we? Sorry guys, just bring that down. Wow, that's how much we've dropped since I last looked. You can see, so where's CVD? Wow, okay, so let's take it from here. So you can see quite nicely we have a relatively fine move to the upside. What does that tell you? But look, the other concern here is the bears, the market orders were pushing down with aggression, but wasn't able to push the price down, which is important to make note of, because this could indicate, you know, the reversal as a wave 4. Because if the market orders that are coming in and new money is also coming in, you can see open interest, which is new money coming into the exchange, is actually coming in. CVD is going down. That means the bears are trying to push the price down with aggression, but bigger players down here have been absorbing that pressure. You can see all the limit orders that are coming in. So let's see. Let's get back to the main chart. Right now, we're just staying out of the trade. Nothing to get excited about just yet. One of the things I always say, these are consolidation areas, these volume zones. These are where, you know, we've had, you tend to see a move down from consolidation area to consolidation area. This was the last zone here. You can see we consolidated for some time right around this zone here, built up the liquidity, and then we had the big shoot down, consolidated a little bit more, and then further continued down, and now, you know, we are back kind of consolidating in this area. My sentiment is if we come down to this zone, we'll probably spend quite a lot of time around here, just because when you have a big sell-off like this, you know, it's a case of having to build liquidity again, and so price tends to just go between these two zones. So I would say, you know, from a range trader, you could just trade these zones quite nicely. You know, you'd be shorting at these zones and you'd be longing at these zones, and you know, we're right back in that kind of main zone of the totality of the whole Bitcoin price action. So we shall see. Now listen, guys, I know we haven't got an awful lot watching it, but if you're watching this in the future and you're catching up, if you're not yet in our Discord server, then I urge you to go and head into our Discord server. It's absolutely free. We have some of the best people in the server. We've got quants who build bots who do an amazing job. We've got people who've been building indicators in TradingView for years, and very successful businessmen and traders themselves. And it's just a really good place to be. And so if you want to learn how to trade and you want to get educated on trades, I mean, yesterday was such a fun day in the server because it was a nice money making day. Everyone caught a really nice short on these, and not just one, multiple shorts as well. And that was all based upon communication, between everyone, keeping people updated on what they're seeing in the charts, how they're anticipating things. And so definitely come and join if you've not already joined. The link is actually in the description. The other thing as well, I just want to make a plug for, given that it's my this is my deal, so I'm able to kind of say this, but I'm now an official partner for ByBit, and that's a really good thing, because when you're an official partner, there's nowhere else on the internet that you can get as good as a referral deal and a bonus structure as what you can from a partner. So I was quite pleased about that, actually, that I was considered. So that link is also in the description. And also, by the way, for the first 100 people to use my link specifically, if you deposit $100, actually you get $10 rebated off that as well, which, okay, it's only $10, but it's better in your pocket than someone else's. So you still get the $100 to trade, but you'll get $10 of that back. So again, if you need a central exchange, for me, it's probably the best one as well. Interestingly enough, one of the things they've just done, which I think is really unique, and I haven't really looked an awful lot into it myself, and something I am actually going to start considering, is you have a unified account. And with the unified account, what it actually does is it allows you to, let's say you have a really big move and you have a lot of unrealized gains. Let's say you're in a much longer move, like on this downside. Let's say you've got a lot of unrealized gains here and you haven't yet taken profit, but you want to offset that with a long against the unrealized gains. You can actually use the unrealized gains to trade. So if you've got money sitting in an account, you don't have to use that money. You can actually use the unrealized gains as trades, which is a phenomenal idea, actually, and something I am certainly considering myself. So just as a little plug there, guys, if anyone wants to jump on that, you feel free. It's probably one of the best deals you're gonna come across. Now that the shilling is out of the way, price is starting to move up, and we shall see. I'm really keen to get back into the short here, if I'm honest. I'm hoping price continues to push to the upside, but it's only going to be a small one at these levels. I'm going to be focused on targeting these levels. I don't anticipate coming and getting this liquidity here. Okay, price push back up. Let's see what you've got. Remember, the CVD divergence was really pushing down big time, but it was struggling to push through. So let's just see. I'm going to wait for the reaction before I market order here. I'm going to see how we react. Let's see first. But I think from a snipe perspective, you could probably get in and get out quite quickly. This move's nice. I like the commitment. Volume starting to rise. I am gonna target a small little short if we want to come to this zone here where the liquidity is resting. Let's go limit order. Not financial advice, of course, but I'll be looking at that 20,580. I mentioned earlier, by the way, that it was actually one I've done on TikTok, that be careful if you're going to continue to short, because the markets will look for any excuse, any reason to be bullish to come and claim some of these people who haven't really paid themselves, and that's why it's always important to take profit when you can, because markets are markets, and they're designed to give greed. So just be mindful. We're much smarter traders. So 25.80, I'm gonna put a stop loss. I'm gonna go with just 25%. I'm gonna go 50x just for. I'm only after a small snipe, to be fair. An in and out job. Come on, Bitcoin, what have you got, baby? Here we go. Now remember, what we're seeing here is not institutional yet, because the markets aren't open yet. This is all, whales and bigger players, retail as well. But we anticipated this move to the upside. We said it. Just because, again, markets like to hunt for where liquidity is, and you think of all of these were, let's just map this out, right? So liquidity, these are all levels which have now, stopped people out, stop losses, and people who have been, short and who haven't been paying themselves. But the main liquidity is here, yeah. Just get rid of that. I do believe, though, any longs are short-lived. We are in hugely negative territory at the moment. Very, very, I would say, downward in terms of the sentiment. The structure is super bearish. We've on a macro level, at least to the 4 hour, and quite soon the daily level will also turn bearish as well. Okay, got me ordering. Does it look like it wants to come and test that liquidity? A lot of consolidation around this area, you see, so it's going to be a bit of a push to the upside to get this through. Looks like it's pushing up. My orders around this area here. Here. Of course, none of this is financial advice, but I think we trade the right way. In the past, oftentimes I would be very FOMO based, jumping in on a move that looks like it's going somewhere. You realize that liquidity doesn't. Well, you realize there's two versions of the charts. There's the charts that the people will see, and very much newer traders will come in and they'll see a move and they want to get in on it, and then they don't realize where liquidity is and where liquidity is resting, and a lot of the times that that idea doesn't really factor into people's brains, and they don't understand it. And it's not a criticism. It's just when you start to realize really how markets move and why markets move, why price action moves, you get a fundamental level of understanding about trading, then moreover than what you would just, you know, putting patterns on a chart and triangles and what other bullshit you kind of draw your eyes to. So you got to just realize that one fact, and I promise you'll be 100 times better trader than you was before. Just taking this move here. It's kind of in no man's land at the moment, so not really understanding why it's kind of getting stuck here. We can take it to the next level. Yeah, 236. I will be back a bit later, guys. I don't anticipate being here too long. I was just kind of seeing what kind of movements was going on for the CPI. The CPI. I'm getting ahead of myself. Yeah, the unemployment claims and the wages. Okay. Well, I think I'm going to just leave this one here, nice and short. Lots of good stuff covered today. I'll see you back a bit later on for the New York Open. Probably do 45 minutes or something like that. Okay. I'll speak